Which of the two buttons would you choose? Is it recession and the stocks will tumble right ahead of it, or ATH, the blue one, and we will dance and partying as the music will play? Today we will weigh two sides of the coin, the pros and cons of particular scenarios. So I'm very glad to host you today, and we'll also go through technical aspects of most important charts, and also go through the other updates regarding economy. So let's begin. All right. So we are at the economy view, and we are right now need to just relate to recent bull that has been technically started. But is it the one that it may last for longer, or is it just as technical as it was back in Q3 and Q4 of 2022 recession, where we did know that technically there was a recession, but everyone was claiming out of the government that I don't know, I don't care, just don't bother, and so let's dance to go on. So in my view, yes, it's right now the scenario where the market is assessing possibly better environment to come right after this rate hike cycle end. But it doesn't literally mean that the worst is over yet. As we don't know this inverted yield curve, we just find out inverted. I need to just point it up. Inverted yield curve is I haven't got it here. Maybe that at Financial Times that may be the one clearly visible and updated. Oh, that's not updated. So do we have it on images? It's neither this nor that. All right, so I need to just jump quickly to inverted yield curve on Federal Reserve. So here you are. Sorry for bearing with me. 10-year Treasury minus 2-year is has been in the past the harbinger of an upcoming recession. That type of inverted cycle is right now pointing that when something will eventually come, that might be very, very painful for all of us. But the market right now want to play the bull side of a coin, where so-called a relief rally might be right now intact, and index of NASDAQ surged into a new bull market for the first time in nearly 3 years as traders pile into technology stocks after this bank sector turbulence as well. So right now we don't maybe believe that the market tends to go toward an upside throughout that kind of a very difficult time. But as we do know, the bulls are climbing the wall of war, and that might be the perfect scenario for them to thrive. So even though the market is assessing the earnings season maybe wasn't much of a enthusiastic as it's supposed to be, but outlooks for the next quarters by many of those companies is better than it was back in quarter 4 of 2022. So based on sentiment, both anecdotally and via service, as well as positioning, rally would be the most surprising outcome here, as is what I mentioned. The majority of the market is right now outside of it and just observing from the sidelines what may eventually come out of this all problems in the economy. So that's what may weigh on future performance. Today we've been hit with this news. The dollarization commenced. I may question as after China completing first yuan settled LNG trade, we may be weighing that that might be a commence of another trend of reverting from dollar, especially of China, Russia, and India, that are not very pro-American policy, as well as east side of a globe is rather against it than the proponent, as also and Iran or Iraq are also the ones that are finding an enemy in US. That's why making transaction with skirting this US greenback might be some of a trend of the decade. So right now the country looking at so the Chinese yuan establishment as an international currency by now has been in focus for many nations. Additionally, country has set to utilize it in gas and other energy resources in the recent years, as the dollar has stumbled. So conversely, also Russia, mentioned by me, has embraced the Chinese currency amidst various sanctions, and that's why we may be right ahead of something very, very difficult for the economy. But my assessment of the situation is that the process of de-dollarization might not be at first very negative for the price of USD. Right now, we can find that the price slumps, but it's not predominantly out of this initialized trend of de-dollarization. Right now, USD is losing due to those fears of spreading globally a world war is right now fading away. And the one thing that we may thought of de-dollarization is at first the ignition of the purchasing power of dollar, when we may find that everyone would run away from its country's nation's currency, as the greenback would be the one of a safe haven mode. So it won't definitely come in a peaceful way, but what may come of next is anyone's guess. So that's my few cents on the topic. So right now we are assessing that the recession is over, at least by now, but right now we have hit a trough of unemployment gauges, and it usually in the past has meant that the peak of the economy is right now. The US labor is having a strong start to 2023, adding over 500,000 non-farm payrolls in January and over 300,000 in February. and both figures surpassed analyst expectations by a wide margin, and a low unemployment rate like this is a very often a sign of a strong economy, but as this visualization shows, a, as we can find, it also very often coincides with a cyclical low before a recession materialize. So you may just put up your stance on the topic right in the comment section below, and in the chat that's going live. As a reminder, if you enjoyed the video, you may hit the like button and share it throughout your friends or family. This will be appreciated. So right now we are also still discussing the element of possible cost of failure of SVB, and FDIC is contemplating assigning a greater share of the nearly $23 billion in expenses incurred from recent bank collapses to the country's largest bank, and among those that may suffer of the title are the JP Morgan, Bank of America, and Wells Fargo that may have to pay. So the U.S. Federal Deposit Insurance Corporation is reportedly considering assigning a larger portion of it to those players. And what would it mean? The impact from the Silicon Valley Bank and Signature Bank could go to the eventuality where those banks would have to pay for the troubles of those smaller entities, and that's not fair at all. Just let the weaker collapse if they haven't made their due diligence on the sector, on the interest rate cycles and everything around it. Don't blame others for the mistakes of the few. And we may also assess that a good many of banks would be really deeply embarrassed by the thing, where I don't doubt that they have the enough finance, the capital to cover those losses, but if we just will assess that the every single time that the larger need to rescue the weaker, then the world would never go forward. So in my view, it's right. It's like the weaker need to pay their bills and pay what they did, and with a whole consequence of the issue. So right now, heading to market outlook, and right here, let's find out what we have right on the thing. So I will just switch you off to our charts, and on a SPX or SPY, you can find that we are right now getting out of this neckline, that may indicate a inverted head and shoulders pattern. So it's very strongly bullish pattern that may prompt us to run eventually higher from the trough. It's around, if it materialized, just wait a second. Oh my gosh. Sorry for switching that right and back. So if the inverted head and shoulders will materialize eventually, we may see a possible objective for SPX to reach 842.3 hundreds. So thousands. No, hundreds. Sorry, sorry for that misspelling. So right now the positivity should return, and that's what we can find is that we should align with this recent highs of 30, 40 to hundreds. The one of the levels that been on August of 26th. Also, we should overtake those recent highs of 2nd of February. That's just about looking at technical side of a coin. Whereas when looking at fear and greed index, we are still in a fear, so it's positive for future better performance, and market momentum is still indicating that we are in a greed. So it means whereas we are in a fear mode in terms of sentiment, but the price showing a greed in momentum, it's usually morph into a more structural and accelerated directional move in the side of the one previous. So this should continue really forward. Right now, let's head on to another thing that's a crypto outlook. That's the third block for today, and I have a very interesting finding for you, as crypto has been really demonized, and there was a wave of slander on cryptocurrencies. It, in my view, is unfair, as many of the banks, we already did know that JP Morgan was engaged in such actions, and also Goldman, but this time Wells Fargo. Wells Fargo, it's not maybe the new reports, but that's the one I found somewhere among the reports. Wells Fargo has paid over 7 billion in fines related to harming their customers in the last 3 years, whereas all of the money ever lost in crypto hacks and exploits took us 6.45 billion. So if you just take such ratio as the one of the reflective point, it wouldn't mean too bad for the whole crypto industry. So all of the money ever lost in crypto weren't higher in terms of amount than the ones out of the solely Wells Fargo, one of the most pronounced banks, and one of the most favorite out of Warren Buffett. All right, so we are taking another step upwards. Just market movers section is the one I want you to discover right here. With economic calendar, we are heading. Let me just refresh it. So let's find out for this whole week. And on Wednesday we had GfK consumer confidence. That's from Germany, but yes, we have just rolled it over yesterday. But pending home sales, just look at this, an increase. That's month over month. So pending home sales in the United States decreased 21.1% year on year. But look at this tendency. We are right now erasing this trough, and it's a sign that we are possibly getting back on its feet after last year's rapid run-up in borrowing costs. So mortgage rates eased last week to a 6-week low, helping drive demand to purchase a home. So there are some other signs also that residential real estate sector is feeling a reprieve. We also seen that sales of previously owned homes surged by the most since mid 2020 in February, ending a year-long decline. And those are few of the gauges that may indicate that this housing market may get a bit better from here. But NHB, just let me know if you do know what's the NHB gauges. That's one of the best leading indicator for the industry. Just showing us. Bear with me. Just 1 second. I got it. Yes. So housing market index right now is also finding a relief. So it's a also positive note for the whole economy. In terms of other events on economic calendar, we have grown through first this GDP price index for final. It's updated one, and we have forecasted one that we've achieved 3.9%. NBS manufacturing PMIs is due to this day, whereas inflation rate out of Germany is slowing down, so it's very positive for the index. Just look at that data. So the forecast was the one that has properly forecasted this drop. So it's very good for the euro currency by large. And tomorrow we have personal income and core PCE and inflation rate out of Europe that's expected to also slander. So let me find out whether everything works as it should. If you are listening live, just write down the comment or anything that I would know that everything works all right. Okay, so we're gonna continue right now. So let's find out. At first, let's head on to earnings calendar, and on earnings we may find out that recent brands as Micron Technology, due to better outlook than for the future and better forecasts, is right now finding a possible much more positivity even after this market slump, and Micron Technology is right now reviving. In terms of Thursday's data, we have a Gerdau SA National Beverage Corp, and on Friday we have Eletricias Brasileiras and Legend Biotech Corporation along Cosan SA. So those are the names to watch. And on the last block, I would like to just reassess the situation on NASDAQ, as we've recently also have been touching that thing. So on NASDAQ, we are very close the market ceiling right now, as we are approaching this recent highs at 12.94. So it means that we've given that price action and this defense right here. Also, with overtaking this diagonal trend, we are right now following the path of the least resistance that's just going up. And US 100 would be in a very interesting spot right ahead of 12.87. So I would expect it will retest this highs of 23rd of March and right after rally back upwards. So for this one, on the daily chart, I would just draw some kind of a box that may indicate possible stoppage and possible entrance area for all of the interested in entering position of NASDAQ. Right now, as we have already just confirmed a over 20% from a market trough that may also spark another wave of interest among retail, and the Nasdaq might be the one where many of those market participants that were waiting for the greater pullbacks may catch in right here at market this local tops. So right now buying this type of reaction is not very reasonable. I would wait for exactly stabilization within 12.89 and any single week lower, any single week lower below this this box I've just drawn might be a very nice opportunity to get on a train of NASDAQ. Otherwise, the reversal of a tendency of rising tendency will be getting lower below 12.80. This will be a sign of a possible reversal, but the one of the strongest one will be just crossing this troughs of 12.76. So on hourly, that's the congestion area that will possibly stop us from falling back downwards. US 100 is the one that has just surprised maybe many bears. I also has been positioning myself for the another leg lower to possibly 12.36, but it didn't materialize, so I need to switch my side, and after this very strong and surprisingly positive momentum, it would mean to me that it's right here, right now, the one of the eventuality of taking a long position from here. So in my view, playing out such a bet would be very very decent in terms of a possible profitability. So it's around 2% to grab from of the table. This objective is established with a convergence of that previous highs, and that where the market may stop, but the final destination for the price is the one being achieved at 13.54. So that's exactly how it looks like. Once again, I'm giving you the details about this trade. So my first objective is the one limited by 12.76. That's the stop loss area, and the target is at 13.15. And that's where I would consider taking out some of the position and load off my bags a little, and with a possibility of even getting to 13.15. 54. So you may just relate to this in a comment section or in a chat, and I will be very curious to know your point. So that's it in today's episode. Thank you very much for watching, and see you tomorrow, 8:45 a.m. East